Hello, this is Manesh Patel from the Infinity Training Group. Today's discussion is going to be over Ichimoku Kinko Haya. If you use Japanese candlesticks, you're going to love Ichimoku. Ichimoku is pretty much the next best thing that's come out of Japan, and it has the ability to pretty much become as very popular as Japanese candlesticks. Reason why is it makes easy trading very easy to do. If you look at the symbols for Ichimoku, here they are, and basically Ichimoku in Japanese means equilibrium chart at glance. Okay. Now, before we begin, we're going to go for a normal disclaimer. This is for educational purpose only. All charts are either in Thinkorswim or TradeStation. Okay. I'm not going to go through much of these bullet points here, but basically I just wanted to highlight a couple of them. Ichimoku pretty much can be used for any instrument, any time frame. It has its own money management built into its trading plan. There's multiple different strategies depending on what type of trader you are. So, you should look at what type of person you are as a trader and adapt the strategies to your needs and to your requirements. And also, Ichimoku is more towards a trend-based system where the goal is to maximize profits when you're right and minimize losses when you're wrong. Okay. Now, you can use some other Ichimoku strategies for counter trend, but mainly Ichimoku today and in the past is being used to recognize trends. Okay. We're going to briefly go through this, but I'm not going to highlight a lot of it. Basically, this system, if you look at Japanese candlesticks, they were basically discovered in 1803. Ichimoku actually started back in 1940s, but the first publication was written in 1968 from a newspaperman named Goshi Hosada. Okay, his goal at that point was basically to do three things: recognize a master trend, find future support resistance, not current support resistance, and also find out when markets were reversing from a trend. Those three main goals was the sole reason for creating Ichimoku. So he went out by hand and with a whole bunch of statisticians to go out and create what today is known as Ichimoku. Okay. Later on, back in 1969, everything was revived again by Mr. Sasaki. And actually, believe it or not, the book is actually on 19th editions now. This is also being voted for 9 years in a row the best technical analysis out there in Japan. If you look at the Japanese trading rooms today, pretty much three systems are used, or three methods: Japanese candlesticks, Japanese Renko and Kaji charts, and Ichimoku Kinko Haya. Ichimoku is pretty much the most popular of those now. Reason why is it helps the Japanese in the trading rooms recognize trends and when things are not trending. Okay, so let's go and jump straight into indicators. We're not going to talk much here. We're going to go straight to the charts. More firm believer of charts than indicators and formulas and presentations. But we're basically going to go through here and kind of go through formulas briefly. Okay, most people are used to using moving averages. Unfortunately, this is not like a moving average. It's similar, but not quite. Okay, so I'm going to compare these to moving averages, but tell you the difference. If you look at the Tinkinson, which is called a turning line in Ichimoku, okay, this is very similar to this moving average with 9 periods. So most moving averages, pretty much when you look at them, you add them to your charts, they're based on closing prices. In Ichimoku, we do not use closing prices at all. We use basically the highest high for the last 9 periods, take that, add it to the lowest low for the last 9 periods, and divide by 2. So what this does, it gives you a midpoint of the range for the last 9 periods. So all our indicators basically are range type of indicators instead, because they look at the highest high for the last 9 periods and the lowest low for the last 9 periods instead of looking at closing prices. This takes into account volatility that happens within that bar, unlike closing prices, because you can't have certain days where a price moves drastically up and then sits there and closes very close to the open of the price. In that scenario, your moving average hardly changes. Whereas over here in the Ichimoku world, it will change drastically. So the lines, the indicators in Ichimoku reflect more of the volatility that happens within a bar than at the end of the day. Okay, so the Tinkinson is more of a shorter time period. It basically represents 9 periods. The Cajunson, same similar scenario. It's a range for 26 periods. The Shikao, believe it or not, is current closing price shifted back 26 periods. It's called the lagging line. And we'll talk more about these indicators once we get to a chart, and they'll be very clear once we get there. And then there's a cloud on the chart, and the cloud is made up of 2 lines. One is called Senekau A, which is basically the average of the Tinkinson and the Cajunson, and then we take that value and shift it 26 periods forward into the future. That's why you have a future cloud that's created past price today. Okay, and then Senecal B is basically the range for the last 52 periods. Okay, so the key thing to note here is you don't have to flip back at the chart to see what has happened in the past, look at support resistance values in the past or anything like that by scrolling back. In Ichimoku, everything is present on your screen as at that current moment in time. Because if you just look at the Senecal B from the Kumo cloud, that reflects exactly the range of price action that has happened 52 for the last 52 periods. Okay, now let's go look at some charts and we'll make it very clear. Here's a sentiment. We'll come right back to this and we'll look at it on the chart. But we're going to come back to this and we'll go from there. Here are my contact details and we'll come back to that too. Okay, so let's go look at the chart and we're going to look at US yen. Hopefully everyone can see this chart. Okay, now I'm going to zoom in. This is basically, today is the day of the recording, which is basically end of August, August 31st. And this is the Ichimoku chart, the daily chart for US yen. Now, I'm using Thinkorswim to represent Ichimoku, but Ichimoku is pretty much available for all platforms out there, for forex, currency, stocks, futures, bonds, and so forth. So it's available from everything from MetaTrader platforms to TradeStation to eSignal to Thinkorswim to freestockcharts.com and so forth. Okay, so let's start and begin. Let's zoom in. The first indicator was the Tinkinson. If you look at that red line, that is the Tinkinson. Remember, that is the range of price action for the last 9 periods. Since we're looking at daily time frame, that's for the last 9 days. The next line is the Kijun-sen. Okay, the Kijun-sen is basically the range for the last 26 periods, and since we're looking at days, this is for the last 26 days. Okay, the Kijun-sen is probably one of my favorite indicators. Reason why is if you look, it contains the trend. If price ever closes above the Kijun-sen in this scenario where it's going down, I know that a possible trend or a possible pullback is on the way. Okay, so in a lot of cases, when you start using the Ichimoku indicator in a strategy in your trading plan, you're going to use this Kijun-sen or the Tinkinson as your stop. So as the Kijun-sen moves, your stop's going to move. So this is like your trailing stop. Okay, and you can see that if you basically were in this trade and using the Kijun-sen as your stop, you're still in this trade. Okay, so that is the container for the trend. If price ever escapes that and crosses over to the other side, that indicates that a pullback is on the way or a trend change is about to occur. The third indicator is the Chicago span. Now, on the Chicago span right here, we basically said this is today's closing price shifted back 26 periods ago. This is right here. Okay, this is your momentum indicator. The thing here you're doing is you're going to compare today's closing price to price 26 days ago. Okay, so if you look, the Chicago is basically the price below the price from 26 days ago. So in that case, this is bearish. Okay, so what Ichimoku is doing is looking for a current price to at least be below, in this scenario, the price from 26 days ago. So we're looking for a trend to be 26 days old in order for us to even enter that trend. Okay, that's key because that's momentum for you. Okay, the goal of Ichimoku is not to try to predict and try to get into the beginning of the trend, or it's not try to get out at the end of the trend. The goal of Ichimoku is to go in and get the heart of the trend and basically to play the high probability odds of that trend, which is the meat of the trend. Okay, so we've discussed 3 indicators now: the Tinkinson, which is 9, the Kijun-sen, which is 26, and the Chicago. Okay, one thing to note. Okay, if the Tinkinson is below the Kijun-sen, okay, which is 9 period below the 26 period, that basically indicates it's bearish. If the Tinkinson was above the Kijun-sen, that would indicate bullish. Okay, so that's another rule. Just like the Chicago is below the price from 26 days ago, that's bearish. If this indicator was in price, that basically means it's neutral and consolidating. Okay, the last 2 indicators basically form up this cloud. Okay, and the way you could tell is Senecal A was basically the average of the Tinkinson and the Kijun-sen, but shifted forward 26 periods ago. So if you look at this price right here, that's taking the current Tinkinson and the Kijun-sen and divide by half, and that's pretty much the value right there, and it's shifted 26 periods into the future. This right here, this value into the future here, is basically the range for the price action for the last 52 periods. Okay, so this future cloud is basically price action that's occurring today, and it's forming the future support resistance values. Okay, so if you're looking at price here and looking at the cloud here, this is basically a cloud that was formed 26 periods ago, i.e. 26 days ago. So this array shows you all the support resistance values from 26 days ago, and you could see how they influence price today. And then the future cloud shows you how today's price is going to influence the future. Okay, so in Ichimoku you have the past, present, and the future all present within one chart, and that's very different compared to most indicators and trading systems out there. Okay, so now we've gone through all 5 of the indicators. Let's go for the rules. Okay, the very first rule that you look for is where's price in terms of this cloud. If price is below the cloud, it indicates the sentiment is automatically bearish. If price is above the cloud, it indicates that basically the sentiment is bullish. Okay, so that's the very first rule, is price versus Kumo cloud. If it's in the cloud, it's consolidating. The second is the Kijun-sen, Tenkan-sen. So if you notice in here, the Tenkan-sen is below the Kijun-sen, so this is bearish. Okay, if it was above it, as we indicated, it'll be bullish, and if it was right at it, it's neutral. So that's the second thing you look for. The third is the Shikao. Is it above price from 26 days ago, below, or within? In this scenario, it's below, so it's bearish. And then lastly, you look at this future cloud, and you see where is Senekau A compared to Senekau B. And what we've done is, if Senekau A is below Senekau B, we color the cloud red to indicate bearish. If Senekau A is greater than Senekau B, we color it being bullish. In this scenario, it's bearish. So again, let's go for the 4 rules for Ichimoku to trade. If price is, in this scenario, price is below the cloud, so that's bearish. The Tenkan-sen is below the Kijun-sen, that's number 2, so that's bearish. Number 3, Shikao is below the price from 26 days ago, so that's bearish. And number 4, the Kumo future is bearish too, where Senekau A is below Senekau B. So this is all bearish. So this is now giving me the green light to trade. Now, you could trade, if you're a pullback trader, you would basically wait for a pullback to the Tenkan-sen or Kijun-sen before you enter. Or if you're a breakout trader, you would establish basically a entry somewhere below the last pivot, which is right there, and you would enter. Okay, so it depends on what type of trader you are. Now, unfortunately, we don't have much time to go through much more. This is a quick synopsis of Ichimoku to give you an introduction to it. But you could contact us here at mpatel@infinitytrading.com or support@infinitytrading.com, and you could schedule to be part of our free videos online. We also have educational classes coming around, or if you want to find out more about Ichimoku heat map, just contact us. So feel free to give us a call or ping us, and we'll put you on one of our free videos so you can learn more about it. There's also other resources available on websites and so forth on Ichimoku. So hopefully you enjoyed the presentation, and hopefully we'll hear from you very soon. Again, here are the sentiments, just in case if you missed them. The bullish signs were Tenkan-sen above the Kijun-sen. Shikao is above price from 26 periods ago. The price is above the Kumo cloud, and then the Kumo future is bullish for the bullish line. Okay. Again, here are my contact details. Hopefully you enjoyed the video, and speak to you soon.